Good afternoon. Time to have a look at what's happening from a markets perspective, with Chinese markets struggling for direction, wavering between losses and gains throughout the morning session. And this is on the back of the concerns in downtown China, especially around the COVID situation on the ground, with Beijing expanding mass testing. However, the big news that everyone has been talking about is Twitter. And we're going to put a chart on screen for you just so you can get a sense of that share price performance, at least over the past 3 months, with the company closing above 6% yesterday, 51 Rand 90, after Twitter accepted Elon Musk's bid to take over the company and move it private, valuing Twitter at 54 Rand 20 a share. The company was expected to rebuff the offer, and that started from about April 14th, when Elon Musk hinted at possibly approaching this company with a potential hostile bid. And we did see about 24 hours later, around about April 15th, April 16th, Twitter adopting what has been called a poison pill, which would have made it difficult for Elon Musk to increase his share above 15%. Nonetheless, that posture did change after Elon Musk did file an SEC detailing at least some of the aspects when it comes to the funding mechanism behind that particular bid. But as you are seeing on your screen there, 51 Rand 90. This is after that particular deal went through. Round about now, it is actually expected to go on to the shareholders after the board have accepted that offer. The shareholders still need to make that particular decision. But at this point, investors are asking questions around what happens to this particular company if it goes private. What will it look like? We do know that the company has been struggling, at least in terms of users. They had indicated that they are targeting at least doubling in terms of revenue growth by 2023, looking at $7.5 billion, and at least trying to monetize some of the users. But to talk to us about many aspects, including Twitter as well, but some of the aspects that are playing out from a markets perspective, we are joined by Jones Gondo from Nedbank CIB. Jones, thank you so much for your time. Given what we're seeing when we look at our JSE market, rebounding there with the resources leading the charge, what's changed here in terms of market sentiment, and why are we green across the board?
Well, it was just a very horrible day yesterday, so I think it's just mounting a little bit of a recovery. So everything's looking green from what was an absolute tanker in the index in index points yesterday. But I think in terms of the resources stocks and the resources index, I think the rebound really comes from the news from China, where they're saying that they're going to focus on new infrastructure, stimulus, and try to accommodate the economy. But it's actually just very mixed views and uncertainty, because we know that there's still supply side bottlenecks coming out of their ports. So in some to a large extent, I think it's just the market trading headlines and flows, and trying to play the momentum on both the metal prices and the stocks.
On that note, then, I'm curious, company news that caught your attention this morning so far?
Yeah, I think this morning the only real news came out of domestically out of Netcare, and it was just good to see that the balance sheet looks robust. I think earnings were guided to be a little bit softer. Capacity utilization in the hospitals around the pre-COVID levels, around 66%. And I think margins is what we have to look at for all hospital players. Just looking at the fact that it was quite costly to run the COVID wards, and now they're going back to the elective procedures, and that should create a rebound in margins and future profitability. On the international scene, it was just we still have a hell of a lot of earnings still to go in Europe. I'll be focusing quite a lot on the Eurostoxx index to just look and see what impact Russia-Ukraine war is starting to have on core Europe earnings.
Right. The one key, I suppose, item everyone's talking about, whether in social media or you're looking at general business news, is the Twitter Elon Musk deal. And from your assessment, I mean, how would you compare Twitter's performance relative to other, tech companies, especially its peers? And what are some of the challenges here?
Yeah, look, I think for Twitter, it's just been about, as you mentioned in your introduction, it's about users, growing users, and then the advertisements revenue. Beyond this, I think it's the difficulty that I think Twitter was going to face, and a lot of the other tech stocks is multifold. First, it's the Russia-Ukraine crisis. They've all tried to withdraw much of their business and content out of Russia, and that is a material shift. And then, the impact on the rest of Europe is that consumer growth is meant to be softer. And I think just the whole view of just global inflation and hiking in monetary policy rates in developed markets, the correlation is quite high to see softer growth in earnings out of tech stocks. I think on the part of Twitter, on the advertising side, a lot of companies, I think, are worried about reputation risk, that their ads show up on parts of controversial tweets, and they don't want to be associated with that. So there's a wait and see attitude that was going into this before the Elon Musk transaction came through. So from a share price perspective, they were lagging their peers, but over the last few days since this transaction, they've really picked up. If you just go back to your chart, I think at the beginning of the month, they're around $38 a share. Now they're above 50, so I think there would be some profit taking that would need to happen there.
Before I let you go, Jones, one particular tech company that you are keeping an eye on, seeing that it is tech earnings week.
Yeah, it's Amazon for me. I think it's a good view into the economy. They were really struggling to get more labor into the business in terms of their logistics business and warehousing. But I think also it's just how robust that business will be to a very steep hiking cycle from the Fed, as well as just a softer consumer spending ability.
All right, Jones, let's leave it there. Thank you so much for your time. And while we're at it, as you mentioned, the likes of Alphabet, Meta Platforms, Amazon and Apple releasing their earnings this week. But that is Jones Gondo from Nedbank CIB. We're going to take a quick break, and then Zinga Gunta will be with you until 3 p.m. It's a goodbye for me.